Welcome to Tradespoon. My name is Vlad Karpel. I'm CEO and founder of Tradespoon, and today we're going to have a weekly strategy roundtable discussion where we talk about current market conditions, what to expect in the market, short-term, long-term, how to take advantage of the current market volatility, and answer any questions you might have. For those of you who are new, welcome. If this is your first live event, do me a favor. Type in yes, always want to welcome new subscribers. This is my brief bio as Executive Vice President, Head of Technology at Options Express from its inception through 2007. Started Tradespoon in 2012. I want to take this opportunity to say thank you to all the subscribers. Because of you, I'm able to do what I enjoy professionally. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade picks will be profitable or equal past performance. Good morning, Sunil. All right, very important. Before we jump into a trading plan, let's go over current market condition. Right, we had a CPI data, a little bit. Maybe a lot bit, we'll see. Worse than expected, right? Worse than expected. Market going from the ECB decision yesterday and from the CPI data today, where it showed months over months and year over year data is worse than expected. Market did sell off. QQQ is close to session low, down 3%. Spiders is down 2.5%. Basically on its way to retest 52-week low, right? Retest May lows. And you can see main driver for that are flattening of the yield curve, right? The 5-year is bigger than the 10-year. 5-year yield is greater than the 10-year yield, greater than 30-year yield, and 2-year yield approaching 3%, right? Steep move to the upside, more approaching 3% and approaching 10-year yield. So flattening of the yield curve and 5% move into 2-year yield. This is what's causing the pullback in the market, and also strong dollar, right? We are retesting basically multi-year high around 105 level. So both higher dollar and higher yield is causing the market to sell off. VIX near 30. Let's see. So not even sure where the bright spots are. Maybe commodities, right? Gold retested May lows, posted lower high, and actually turning positive as we speak. So commodities, silver, gold miners are turning positive. You can see it in the next ME reversal. So, and again, this could be fear of recession or fear of market kind of breaking down. So then people are going to hide in gold and gold miners. That could be the case. We'll just have to wait and see. What else is positive? Let's look at the. And China is slightly positive, still staying in the above uptrend. I guess that's a small win for the bulls. Other than that, let's see, junk bonds are retesting the lows, right? Very steep move in junk bonds up, vertical move down. Very important to hold on to this bottom. I would keep an eye on junk bonds. Let's see, sitting the key support. There's not much support beyond that level. Right. Let's see, we talked about treasuries. Everything else is selling off, so kind of a broad-based sell-off across all asset classes. So the question is, where's the market going next? So we have two main events that are happening next week. One is the PPI data on Tuesday, And then we have Fed decision on Wednesday, which can spark the volatility. We're approaching, we're not that far away, 2-3%. So literally it looks like we're retesting the lows. So you know where your stop level is. If Wednesday, Thursday after the Fed meeting, market is below 380, I would get out of this trade, right? Then we're heading much lower. If we're staying above 380 and the lows are holding, then it's going to be a very violent next week, and we can quickly still retest 420 and 430 level. Short-term market is extremely oversold, just like it was extremely overbought when we went from 390 to 420, right? When we went from 420 to 390, it's the same thing. So short-term market is extremely oversold. Probably people don't want to hold on to their long positions going into the long-term weekend. So my thought process at this point, because there were just such a violent moves yesterday and today, we dropped almost 10%, right? So 30 points, 8%. So we dropped 8% almost in 2 days. I would be, I would just wait for next week. Closing right now at extreme levels, it's probably too late, and I know where my stop loss. If the market drops below 380, then then this rally is over, right? This was a rally in the bear market. It was probably smaller than I expected. I expected to go to 430 to 440, but it is facing this overhead resistance that we talked about, and it just never got to that level. On the other hand, market is oversold, just like it was overbought 2 weeks ago. And then if PPI data is better than expected on Tuesday, or Fed basically going to say that we're not changing our course, basically no new data, we just have to, 1 month is not enough to make any decisions, so then the market probably will rally. So that's my thought process. You have a well-defined stop level. I would not hold long positions below 380 level, right? I would also wait, for maybe 1 or 2 days below 380 and just see what happens. But short term, by any technical indicators, you can look at RSI, you can look at MACD. Market is extremely oversold, right? So we can do back volume indicator. And Bollinger Band. Bollinger Bands. Not sure where they disappeared, but again, we're lower Bollinger Band, and volume has, obviously not extreme, still kind of a low volume. All right, any questions? All right. So, good morning, Karen. Karen, what happens in recession? Well, market is a forward-looking indicator. You might not have, recession might happen in 23 or 24, but the market basically, in anticipation of recession sells off, right? So we have basically a well-defined support level, right? It's psychological, a lot of kind of a self-fulfilled prophecy, right? Kind of a herd effect. Everybody thinks that 20% correction considered to be healthy pullback in the bull market, right? And a lot of people still feel this way. So during recession, usually in a bear market, by definition, bear market, anything above 20%. So if the market doesn't hold down to 380 level, basically going back to the game theory, a lot of people will shift their mindset from being, hoping that we're still going to make, there are a lot of analysts out there that still think that we're going to hit close to all-time high this year, right? Because, CPI and PPI, in reality, there's not really any new news from ECB yesterday, nor from CPI, right? I mean, yeah, a lot of people expected it to be kind of better than expected, or, inflation start going down, but in reality, why June, why May, why not June, right, or July? It's not like it went, everybody expected 8.3, it's 8.6, okay, but still, It's not a big difference. So this is more of old news, right? So a lot of people think that all of the inflation data is already factored into the news, and there's still low unemployment number and double-digit growth in S&P 500 companies. So the market is going to be at 480. That narrative, I think, will change significantly. If the market is going to drop 380, you're not going to find a lot of people thinking that we're going to get to close to 52-week high this year. So that will create a lot of volatility in the market. So we might have these 7-8 weeks of downward momentum. So in recession or in bear market, if you look in last bear market, I don't consider 2020 was just a short kind of a bear market, but any prolonged bear market, like where the market goes down for 6 months or more, last time was 2008 basically. So in 2008 the market was down, I don't know, 55%, 50%, right? In 2001 it was 60%. Before that, 1991 it was down 40%. So in these bear markets, it's more than 20%. It could be 35%. It could be 45%. Just depends on how long the inflation going to stay, how long the war in Russia and Ukraine stay. But that's what happens in recession. It's a repeat of 2008 or something similar. That means done. Thank you for your thoughts. Kevin, I agree, right? Decoupling of the, usually where do people hide? Usually they hide in gold, right? That's why GDX is up. But, but that would be divergence, because GDX used to trade like, metals and miners. So the fact that gold GDX is decoupling could be two things. Either the market is oversold and we're going to have a rally next week, or the bear market is going to intensify and people are going to hide. Traditionally, where do they hide? They hide in gold, right? Silver, and treasuries. Treasuries is also down today, so that's, you can interpret it as negative or positive. That at least there is no panic right now. As of right now, there is no panic, and VIX is around 28. But again, my thought process is always 1-2 days do not make the trend. We do have this day 1, day 2, very steep pullback. That is a strong reversal. I would want to wait till end of the day, which is Friday. Traditionally going into Friday, people do want to hold long positions, right? After such a high inflation data from Europe and United States. If Monday and Tuesday, we are retesting 380 level, right? And Wednesday, Thursday, we're below 380 level, then that we're going to have this rally is over basically. Then this rally is over and the bear market will intensify, right? Anything below 380 market is going to drop to 350, 320 very quickly. So from that perspective, I think there's little room to the downside, right? I think to the downside we have 10 points. 10 points. It could be today, right? Or it could be Monday, Tuesday. So there's 10 points to the downside. To the upside, I still think there's about 50 points, right? So this is risk versus reward is favorable to go long, in my opinion. The question is the portfolio beta, right? And how much are you down, right? The rules we outlined, which are important, right, is that you have at least 30% of your portfolio in cash. I propose 50, and then portfolio drawdown. Right, if you follow the rules and you don't break the rules, right, going back to this, my new favorite concept that I didn't learn it, but kind of I reread it thinking in beds, right, this Ulysses contract. Ulysses pact, right? You hear the sirens, right? And the sirens that the market is oversold and is going to rally, right? And you are wanted to follow those sirens, right? But then Ulysses pact is that you're going to sign a contract with yourself where, in this case, sailors were putting wax, not to hear the sirens, right? So in our example, in my interpretation of the Ulysses contract, you have 4 positions, 2.5% of account value is your maximum loss. You're 10% down, right? So if you are 10% down or close to that number, right? If right now you're down 10% of your account value, I think this is an opportunity. I still think not enough data. Let's wait and see what's going to happen next week. I assume by Friday we'll be higher than right. We're either going to be much higher by end of next Friday, right? We're going to be somewhere in here in the next 2 weeks, or we're going to be much lower, right? And we'll know this as soon as this level, if this level breaks. So then I would say I would not buy maybe now. I would just wait and see what happens. You know, personally, I'm getting close to probably not 10%, but maybe 5% down. So I'm going to wait and see some kind of signs of stabilization. So then I think it's the opportunity to go long. So that's case number 1. Case number 2, if you're down more than 20%, well, then it's a problem, right? Because the thought process is, what if it does break? I don't know if it doesn't. Then from all of a sudden, from 20%, you're probably going to be down 30% or 40%, right? And that's unacceptable, right? From my perspective. Going back to Ulysses contract. Ulysses contract, if you're down more than 10%, then you need to raise cash, right? Start closing some of your long positions. If you're down less than 10%, I think this is an opportunity to go long, right? So it all depends what your portfolio composition looks like, right? Because nobody knows, right? I still think 70% chance in the next 2 weeks we're going to be higher, but I do realize that there is a 30% chance, right, that PPI data might be worse than expected, and Fed will say, you know what, inflation is so hot, we have to, aggressively, raise rate hikes. They'll get even more hawkish. And that will pull the market below 380. So nobody knows exactly, but I know exactly that if I'm down 20%, I'm going to start selling all my positions. So instead of waiting for 20%, I'd rather do it when it's down 10%, right? So this Ulysses contract, and again, pushing regret in front of your decision, right? You want to push your regret in front of the decision that if you don't want to be down 30%, because most likely you're just going to stop trading. You're going to say, listen, this is a crazy volatile market. Nobody knows what they're doing. I'm out, right? You want to avoid that irrational thoughts, right? That exaggerated thought process. The only way to avoid it is not being down more than 10%. So that is the key rule. It sounds very simple, right? But it's very hard to follow, right? Because we all get emotional. The market is up 10% in 1 week, down 10% in 2 weeks. You've never seen it in your life. You're like, what is going on? Like, none of this makes sense to me. But if you control things, but if you concentrate on things that you can control, well, then this could be opportunistic. Again, I encourage, wait 2 to 3 days to confirm trend. Day 2, it looks pretty bad. I would say let's see what Monday and Tuesday look like. Allow more time, push expiration months forward for this specific reason, right? If you have a spread that expires in June or July, you probably don't have enough time. But if you have September, okay, you have time. Allow more space, right? You look at your stop losses, write that Ulysses contract with yourself. Don't make it a mental stop level. The best thing that I've learned, from working in corporate world is, why do people send FedEx as opposed to mail or email? My boss would always say, just send them a FedEx. Because when you send a FedEx, it makes a totally different impression on your mind. Or why do people use credit cards? Now American Express credit cards are 5 times heavier than regular. Because when you look at that credit card and you feel it, right, it gives you, your mind creates certain images, right, certain biases, right? When you get a FedEx envelope, you treat it a lot differently than, if somebody sends you email, right? So if you write a journal, if you keep a journal and you write a contract and maybe you put it in your envelope and just say, hey, I'm never going to be down more than 10%. I'm only going to have 4 positions. I'm only going to use 2.5% of account value per position. That is not a mental stop level. That is a binding contract with yourself, and you don't want to break that contract, right? You don't want to break that contract. Wait for volume and VIX reaching extreme levels. This is the Achilles heel, right? This is Achilles heel. We have never had a volume or VIX at extreme levels in S&P. So by definition, we don't really know when this level will be broken. I think it's going to be later, maybe in July, not early June, but I had the same opinion in May, and I was made the wrong assumption, right? I thought we're going to rally, but we sold off. This could be a repeat of the May, right? The June price action could be almost identical to May price action. So for that reason, this is always an issue. It's going to stay an issue until we have panic in the market. We haven't had a panic in the market. We didn't have it in April. We didn't have it in May. I don't know if we're going to have it in June, but at some point we will. I think it's going to be later this year as opposed to now, but we'll see. Remember strong ABC patterns, right? You're going to have these violent moves, right? You're going to have violent moves where market is going to drop, right? This is extreme wave C, right? You might have wave B, usually 50% retracement, right? We broke the support. 390 to 410 is about what, 20 points. So you might rally 10 points, right? You might rally 10 points and then retest, right? So this A and B, C pattern is, there's always, especially when the market is oversold, you always might have these violent ABC patterns. So something to always keep in mind. So the question is junk bonds. Junk bonds, Bitcoin, ARK Innovation, these are my parameters, right, for risk taking, right? When ARK is down 6% and retesting the lows, I know very little appetite for risk taking, right? When junk bonds are retesting the lows, I know very little appetite for risk taking. Does it move in tandem or opposite? It's kind of, you can look at it as a forward indicator, right? If junk bonds is going to break this level, right? If this level doesn't hold, and Monday we're trading below this level, Tuesday we're trading below level, and Wednesday we're trading below this level, right? We had this steep pullback in junk bonds, then this is an issue, right? Then most likely, more often than not, spiders will also break 380 level, right? So if I'm going to see next 2 days, junk bonds is already below their recent low, but spiders are still staying here. That would be a very concerning sign. And same thing with Bitcoin, right? If you look at the Bitcoin, I don't know where it is now, kind of not going anywhere, right? But if the Bitcoin all of a sudden collapses and drops below this 543 level, or GBTC, let's see, right? If it drops below this level, then the stock market probably will follow too, right? So all of these risky asset classes like junk bonds, ARK Innovation, Bitcoin, they're already sitting on the 52-week low. For now, they're not really breaking them below, right? And then Russell 2000, probably outperforming the market, right? Which is, it could be interpreted as a positive sign, right? Russell 2000 is sitting at the 50% retracement from recent low and recent high, and QQQ QQQ is already below. I mean, it could be interpreted as a positive sign, right? Because Russell 2000 is also a proxy for risk taking and broad-based market. One point raise now on the table, done, right? So Fed is not going to raise 1 point. I don't think they're going to raise 75 basis points, but it seems like they will raise 50 basis points, very high, almost 99% certainty. In June, they'll raise another in July. They raise another 15. But they're not going to raise 75 basis. So if the futures imply 1% raise, then most likely that's not going to happen, and the market will revert. Yeah, if the market closes down today, this will be 9 out of 10 weeks down market. Yes, this is pretty concerning price action, right? Out of 10 weeks, 9 we had down weeks. One way to interpret, the other way to interpret, we're not making new lows despite worse than expected inflation data, despite worse than inflation than expected CPI, So we'll see. Right now, it's all about price action. You just look at the price action, and it will tell you what's going to happen, right? You'll know what the answers shortly. Amazon is a proxy for consumer discretionary, right? And Amazon is, nothing worse than any other stock, right? If you look at Amazon price pattern, I assume Google is very similar. Google is almost the same. Microsoft is almost the same. Microsoft is actually worse than, and then Apple also the same. So this is another good chart, right? Apple is already retesting its lows, right? And Microsoft retesting the lows. So you probably don't even have, if these levels don't hold, if we are trading, it's 246. If we're trading below this line Monday, Tuesday, Wednesday, then the sell-off will accelerate. Then it will be time to close the long positions and go short, right? So again, Apple, Microsoft sitting in the key support. Sunil, thank you for signing up for Dynamic Power Trader. Dynamic Power Trader at least will tell you what, where I think the market is, right? You'll see it trades. I'm observing the market, sign up for the SMS messages. I don't put a lot of positions in there. And it will help you navigate the market volatility. But thank you for your subscription. Kevin, yes, I agree. Highest inflation since 80s. 10-year yield above 380. Okay. $320 and $315, right? Did you say $315 is at or above $315? Yeah. So we're at $315. We're basically retesting. We are retesting May high, right? So again, all of the asset classes are sitting at the key support resistance levels, right? If the 10-year yield gonna continue going higher and dollar continue going higher above these extreme levels, then 380 level will not hold, right? So then you just have to wait and see. Additional lockdown. Okay, thank you, Kevin. Don't you think this is not the time to go short? The market is extremely oversold, right? I usually go short when I see certain levels will not hold, right? At 417, 420, this was the time to go short, right? And you can see I've been closing a lot of positions at 420, right? So, well, I did add yesterday because I thought CPI data would actually be better than expected, but I did close QQQ. I closed XOP, closed COOP. close IWM, QQQ, trimmed FCX position. So when the market is overbought and you see a lot of overhead resistance at 420, it wasn't able to do it. This is where you would trim your positions. At 390, the sell-off is extremely overdone. So going short only makes sense to me if the 380 level doesn't hold, right? It's a risk versus reward. The way I look at this is my downside. 15 points, 10 points, right? If we're breaking 385, 380, okay, I'm concerned. I would probably get short. But again, on the other hand, I would wait at least 2 to 3 days for the market to be below 380, right? Because very often we have 1 or 2 days where the previous low, right? You have 1 or 2 days lower and then it goes higher, right? You have 1, 2, 3, well, this is 3 weeks, 3 weeks lower, but this is a pretty big jump. So my point is, if you have 2 days below 380, then yes. But if it's just 1 day below 380, I would not get overly bearish. But the point remains is that you have limited room to the downside, maybe 15 points at this point. To the upside, easily we can retest at least 420 level, right? So that's 30 points to the upside. So risk versus reward, it doesn't make sense to go short. You might not want to go long right now because you just want to, there's no reason to catch the fallen knife. You just want to see what happens in the market. But there's no reason to go short either. If we see day 1, day 2 below 380, then you have a lot of room to the downside, right? At least this level, right? At about 350. Then you have minus 30 points. Then you have additional minus 30 points. But right now, I think the most is 15 points. If you're confident that this level will not hold, then yes, you can go short. I'm not so confident that we're going to break 380 level. I actually have very low confidence as of right now that the 380 point will break. And again, one of the main reasons, because I know CPI data is worse than expected, but it's not a new news. We knew about the inflation. We knew inflation will be persistent. There's no reason to think that the inflation will start dropping in May. Why not in June, right? So I still don't. So that's my thought process. This is why I probably would not add. But again, if you're down more than 10%, I would just not buy. You could buy hedges, or I would just raise cash, right? Cash is the most important right now. So if you're down 20% or more, I would raise cash. How can the dollar go higher if the inflation? The dollar is going higher because of the most important reason, I think, is this ECB decision and United States, right? Europe is not raising interest rates, right? Not this time, and they're only raising 25 basis points in July, where United States already raised 0.5%. In last meeting they're going to raise another 0.5% now. So people are selling euros and they're buying dollars, right? The euro is down, right? The euro is down, and people are buying dollars, right? Because they're getting more interest rate, right? We have negative interest rates in Europe and positive interest rates in the United States. So that is the reason dollar continues to rally, plus fear, right? People usually hide in dollar. When the market is in bear market or recession, then everybody hides in dollar, right? This is one way to, get more interest rate. Model says SPI, yeah, model has to adjust, just like, my rule and model is the same rule. 1 or 2 days do not make the trend, right? It does look pretty bad. It sells off. It doesn't make the trend. So right now it still shows positive. Well, because it's only factored yesterday's price action, so there's only one price action. This number is going to get significantly lower on Monday, but it needs to adjust. This is only driven based on the 8 p.m. data from yesterday. So it did see the ECB decision. It still was about 50% retracement. Now it's going down. It will take 2 to 3 days to adjust, right? It will take 2 to 3 days to adjust based on the new market volatility levels. So that's always the case. But if you look at the 6 months prediction, model shows you long-term negative trend, and it does shows you, interestingly enough, that 387 is your key support for the months of June, right? So for the months of June, 387 is a support. So it is reasonable to assume that spiders will get to 387. Maybe again, it can get a little bit lower than 387, right? You can actually retest 380, but model thinks that this level will hold. If market is looking forward, why do you think the second part of the year will be down? So Deborah, question is, why do I think that the second half of the year will be down? The reason why I think is that market has not factored in deceleration in corporate earnings, right? Market assumes that we will have double-digit growth in earnings, but with this high inflation, high input cost, at some point it will affect corporate earnings. We already have signs from that, Intel this week, Microsoft, Target, Walmart. So there are already signs, but we're not in the middle of the earnings season. I think once we're in the middle of the earnings season and corporations will report, and if this contagion spreads into the corporate earnings, right, and the margins will start decreasing, that is not factored into the equation. So for that reason, I think it's inevitable for the corporate earnings to be affected. So I think after July, we're gonna, market is going to continue down. And I do think we're trading in bear market. And by definition, bear market is more than 20%, and spiders is down only 20%. So it has to be more, right? It has to be more. And I don't know what it is, 30%, 40%, 50%. That, I guess, we'll see based on inflation data and corporate earnings. But that means that at least this year, and especially with midterm elections, and Russia-Ukraine war is not going to end anytime soon, I think there's more. And, I thought it's going to be later, it could be earlier. Again, I guess we'll just have to wait and see. But not if you have any other questions. All right, any other question? Well, this is prediction for the entire month, right? 387, 440, this is prediction for the entire month. So for the entire month, basically model says we will gravitate toward 418 and we might close at 418 or gravitate toward this prices, and the extremes will be 440 and 387. So these are your points. I know at 387, this is the reason why I don't want to go short, because I know we are reaching what the model sees is the extreme for the month of June. Does it mean it cannot go lower, right? In May, we went actually 5% lower than in 387. So it's possible to be lower, 4 or 5%. But I know this is my trigger point where at 390, I don't want to go short because the market is oversold. At 440, 430, yes. Obviously, even 420. But at 387, no. Right? So these are 6 months predictions. And just keep in mind that each data point is 1 month's worth of data, right? 1 month's worth of data. So we're analyzing, as much data as we have, past 30 years worth of data. And based on the past 30 years worth of data, the extremes are 387, 440. We are currently trading at the extreme. Osama, thank you very much. And remember, right now everybody's emotional. You guys are emotional. I'm emotional, right? Fear is a lot stronger than the greed, right? The fear, the pain is a lot stronger than, pleasure. So, but that doesn't mean that anything has changed, right? If you objectively look at the market, this is objectively looking at the market, we are reaching extreme levels, right? So going short at 387 is probably a mistake, right? Going short at 420 or 440 was probably a good idea. So kind of, this is the clue next time. Next month in July, if we reach 428, probably makes sense to go short. If we reach 375, maybe makes sense to go long. All right, the tool is not emotional, right? The tool is just looks at the price action, historical data, and just basically says, based on the current momentum, right, these are the price actions, right? I think in the May, we undershoot by 5% because maybe people realize that the war in Russia and Ukraine is going to stay longer, or Fed got more hawkish than they were, in April and February, and I think usually April, May are traditionally bullish months. Everybody knows that June, July is traditionally very bearish months. Everybody's kind of used to the Russian-Ukraine war, used to inflation. We still don't have any earnings, so that's why I don't think we're going to undershoot by 5%. Right? I think, 380s, 375, fine, but not 350, not in June. I think 350 is October, September, but I think it's too early. But I could be wrong, right? We'll just have, but there's just not enough data to say whether I'm going to be right or wrong. Right? We just have to wait and see. All right, let's see if there's anything interesting happen. All right, so how can we help a Tradespoon? We do have Elite Circle, right? Elite Circle or Dynamic Power Trader on Yellow Tunnel. Sunil asked. This allows you to see the closing bell, morning bell, and recording. Every trading decision I make is recorded here, real time. You can always see my orders, my positions. You can always sign up for SMS messages every time I trade, so you can know, if I'm going to close all my position, you'll know. Today I'm not doing anything. I'm wait and see mode. Right? Yesterday, I thought market is overdone, and I actually bought, the QQQ that I sold. Right? I sold it at 310. I decided, I'm going to buy it at 300. Okay, but at least you see it real time. My orders, position, SMS messages. So I encourage you to consider Elite Circle. Also on YouTube, if you guys can do me a favor, on YouTube, we're trying to grow our number of subscribers, right? So if you search for Tradespoon, and you click on subscribe, you will get every day, you will get a video, right? On Monday, you'll get our trade examples and FAQ. On Tuesday and Thursday, you will get the 5-minute video explaining what my view on the market is. On Wednesday, you can actually participate live in the trading room. Even though you're not a paying subscriber, you will be able to participate live, morning and closing bell. And on Friday, we have a strategy roundtable, also broadcasted on live. So those are some of the advantages, right? If you like any contents of these videos, do me a favor, if you can just share those links, either if you're on the forum, especially if you're in the forum, Facebook forum or Discord servers, any communities of subscribers. Just if you enjoy the content, if it helps you navigate current market condition, I'm sure it will help others traders. Please share the content. Right, 10:20. Other questions? How's the market, Carmen? I'm not sure how's the monthly trader holding up with all the volatility. I'm not sure what you refer by monthly trader. Spiders. I mean, I do like to look at the hourly chart. Obviously, it's oversold. The pendulum swings both ways. I mean, it looks like it's holding, but it's too early to tell. Closing session. We're not going to have a closing session today, but if we close above this level, obviously this is a strong support, right? This 388 or 385 is extremely strong support, right? We only overshot it once to 380, but we are at the very strong support. So it all depends where, it all depends where we're going to close today. That's one. And then Monday. Well, Monday there's no really news. I'm not sure, but Tuesday we have PPI data that could spark volatility. And then Wednesday and Thursday we have, Fed decision. I assume that Fed is not going to say anything new. They're going to just say, listen, 1 month doesn't make a trend. Last month's CPI was better. We rallied. PCE was data, market rally. This time it's a little bit worse. Market sold off. That from the Fed perspective, nothing has changed, right? So they're going to say nothing has changed, and that could spark market rally, right? And same thing with PPI. But if they say, listen, the data is getting worse and worse, we have to take extra measures. We're going to start aggressively selling our treasury holdings. Well, yeah, then then the market is going to sell off. So it just all depends what they're going to say. Thank you, Kevin. Kevin, I agree. Yeah, in terms of individual retail traders, keep in mind we're in summer, right? We're in the beginning of the summer. A lot of people are on vacation. The volume is going to dry out, right? And you can see that we are 10% down. Right, market is 10% down this week, and the volume half of what it was in May. So that's an issue, right? That causes the pendulum to swing left and right to extremes, right? Because there's not enough buyers and sellers in the market. They're in Florida, they are, Orlando. Everybody is sick and tired of sitting at home, and so people are traveling, right? You can't buy tickets. You've seen in the CPI data, the airline tickets are just, hotels are just, at extreme prices. So that's causing liquidity issue in the market, right? So for that reason, you have to be careful being overly bullish or overly bearish, right? Because just remember, pendulum will swing left and right to the extremes. Carmen, thank you very much. Thank you. I will make sure Lenny knows. How many trades do I do stock and options in DPT? I would have to look, maybe 4 or 5. You can look, now that you're subscribers, and just go into the orders and you should be able to see it. Am I saying Fed won't raise 50 points? No, Fed will raise 50 points. I'm not saying Fed will not raise, 100 base points or 75 base points. That I don't think is going to happen. No, I think it's almost 99% probability they will raise 50 basis points. I think Dan said that right now there is based on the futures contract it factors in 100 basis points. I don't think that's going to happen, but 50, yes. Oh, thank you. Yes, the idea, Osama, yes, on YouTube, we're posting every day. See this banner? Every Monday, Tuesday, Wednesday, Thursday, Friday, there is a video every single day. And our numbers are growing. So I appreciate your support. Please click that bell. But yes, you will get daily videos. Nizar, my thoughts. So question was my thoughts on PayPal, right? PayPal sitting at the bottom, right? It's sitting at the 2020 low. It's worse. I don't think the market hit the bottom, right? I think it hit the bottom maybe for the next few weeks, but my opinion that we're going lower, just a matter of time. Maybe now it's too early, but we're going lower. So PayPal is also going to go lower, probably lower than current level. So Roku, I mean, this is acquisition, right? So mergers and acquisitions, I usually don't try to predict. If Netflix is going to buy Roku, then whatever the price is, I try not to speculate on mergers and acquisitions, right? By Twitter, one day they're buying, one day they're selling, and I don't want to be caught in these. So I try not to trade merger and acquisitions. NIO, same price pattern, motor vehicle, green electrical energy, battery. But the charts looked identical. They all look identical, right? If companies don't make money, then I put them in the ARK ETF, right? Instead of buying NIO or Roku, just buy at least ARK. I think it's, but the point is, companies, the high beta, don't make money, you put them in the ARK bucket. I would stay away from them, not buy them. If certain company you love and you did your due diligence, let's say Roku, right? You think they will actually buy Roku and Roku is going higher. Okay, buy 2024 leap, right? 2024 leap because you believe in the company, right? But it has to be a fundamental story. It has to be long-term commitment, and you have to commit certain amount of money. Just forget about them, and don't look at them for the next 2 years or 3 years. So then it will be okay. But short term, this year, these companies are all going lower this year, right? Together with the market. And PayPal, Roku, they will sell off more than QQQ and Spiders, right? But they will follow QQQ and Spiders. It is interesting divergence. Yes, this is the first day we are diverting, right? Gold is up 2%, silver. It could be interpreted as a good sign or a bad sign, right? If it trades like metals and miners, it basically reached the May bottom and now reversing, that means the equity market will follow. That is one interpretation, and that's how it's been, for the past 6 months. So this could be a bullish argument. Bull argument basically say, hey guys, too far, too quick, we reached the main support and now we're bouncing back. And that is my preferred explanation. And I think this is a preferred explanation. The bears will explain it differently. Bears will say, bear market has resumed, Spiders level, 380 level will not hold, right? Inflation is worse than expected. This level will not hold. Where can you hide? Where do you put your money when, in a bear market or in a recession? There's very few places. Usually people put money in gold. That's why gold is up. People put money in treasury. Treasury is not up, also kind of doesn't make sense. And then people put money in dollar. dollar is going higher. So you have 2 out of 3. 2 out of 3. So again, it hasn't been even 24 hours since, it's only been 24 hours since Lagarde's comment. You just need to be patient. Unfortunately, it's very hard to be patient, especially for me, and it seems like for most of you, it's hard to be patient, but you got to collect the data. You got to collect the data and just watch what happens. So that's a bull argument and bear argument and self-serving bias, right? If you're a bull, like I'm bullish short term, so I'm telling myself, it trades like a gold miner, miners gonna, there's divergence, so okay, we're probably close to the bottom, but at the same time I realized that that I'm not always right. So then the bear explanation, which also makes sense, okay, let me park my money in the gold miners or gold, because this is what's gonna rally if the market is gonna collapse. Sunil, thank you. Trader, thank you. Carmen, thank you. Best buy, same thing. I mean, every chart that you show me, they look the same. So there's no reason to think that they're going to be differently, right? I'm not a bottom-up approach, right? You have a top to bottom or bottom-up. A lot of analysts are bottom-up, right? So if you're a bottom-up approach, again, going back to the Ulysses Pact, whoever you listen, assume they're sirens, right? They look pretty, they sing well, but they are sirens, right? So I encourage you to do your own due diligence. And if you do your own due diligence and you agree that Best Buy will outperform the market, again, 4 positions, no more than 2.5%, right? And any of the stocks you mentioned, long term, you buy and you forget about them for the next 2 to 3 years. You don't look at them, and you have to make sure that this fear of future regret that doesn't happen to what happened to the sailors. 4 positions, 2.5%. You already mentioned more than 4 stocks. So if you put in 2.5 in more than 4 stocks, I know that if your account value is going to be down more than 20%, you're going to sell all of them. You're going to sell NIO, PayPal, and everything else. So follow the Warren Buffett advice. Convince yourself why you do not want to buy any of these stocks, and only 4 that you really like with maximum loss of 2.5, then you buy them. But it cannot be all of them, right? And to know which one is better, PayPal, Best Buy, or NIO, I mean, I cannot tell you. Nizar, where do I see 10-year picking? Unfortunately, we are staying at this support level, right? So if this level will hold, but we didn't break below 270. So this bull trend is continuing, right? We had a very strong, you have this 1, 2, 3, right? And then this huge wave 3, right? Like nobody has seen before. We had 4. I assume we're trading in 5. And 5, I mean, it could end here. If this level doesn't hold, it's going to go higher. How much higher? I mean, 3.5, 3.6, 3.8. But that means market is going to break through. At some point, it will do this. Whether it's going to do it next week, I don't know. But this is always a risk. This is a risk, right? Because we are trading 1, 2, 3, 4, big pullback, and 5. Where does the 5 end? Sometimes it ends here, sometimes it ends 3.33, but probably 3.5, 3.8. Because I heard on the news, a lot of people are quoting these numbers. The only problem that nobody tells you when we're going to reach those levels. So that's the elephant in the room. You can predict the levels, but predicting time is a lot more difficult. No, Kevin, I wasn't listening to the January 6th. No, I wasn't following that. That sounds scary, right? A lot of people say I try to scare people. I don't, right? I basically, my reason here is not to scare, but to basically tell you that nobody knows, right? I'm gonna say it maybe in a little softer terms. Nobody knows, right? Nobody knows whether this is gonna be in 2000, right? Will this be 2008 type of trading, right? My true belief that nobody knows, right? Nobody can tell you this, right? We could be down, we're already down 20% like we did in 2008, and then we can drop, 55%, right? I don't think that's the case, but nobody knows. So for that reason, I'm not trying to scare anybody, but I'm trying to say, why not have a similar trading scenario, especially with such a high correlation to 2008, with all the uncertainty in the market, right? With all the uncertainties in all the red flags, why not assume that spiders is going to drop only 20%? Why not drop 40%, right? So, and I think there is more signs that we will drop more than 20% than less, right? And I know that's, and you can hear it on the CNBC and Bloomberg. Now, I'm not the only one, right? When I said that in January, February, March, people were probably not taking me seriously. Now people take me a lot more seriously because CNBC and Bloomberg kind of says the same things. And the point is, once 20% doesn't hold, once market drops below 20%, you don't know where the bottom is. Then it becomes like, okay, anybody's guess. It could be another 10%, another 20, another 30. Nobody knows. It's going to be like a panic, right? Just like we had in September of 2008. 2008, there was a trigger, like Lehman collapse. We're not going to have a Lehman collapse, but there's plenty of triggers we can have, right? Superinflation, Russian-Ukraine war, whatever else, right? So very vulnerable market. So I'm not trying to scare you. I'm trying to get you into cash preservation mode, right? Because if you're down right now 10, 20%, you can recover as long as you have a lot of cash. If you're all in and you're 20% down, well, you know that at some point, I know once you're down 30%, 40%, you're going to sell everything. You're going to say, listen, I don't care about anything, I'm out, right? So I'm trying to avoid this regret, right? This Ulysses pact, right? As long as you write a contract with yourself that you will never be down more than 10%, right? Or whatever that number for you, 15%. Okay, great, then, then it's totally fine. If you don't have that contract, then, I think, unfortunately, there's a high chance that the siren songs are gonna, cause negative effect. So hopefully I'm not scaring you. That's not the intention. I want you to be very skeptical. I want you to be skeptical for people who are saying that we're going to reach all-time high this year. You should be skeptical. You should question them and do more research and try. And if you didn't trade to 2008, or you don't think 2008 scenario is possible, I encourage you to sell into the rallies this year, right? If you haven't traded in 2008, you don't think, then just sell the rallies. This is the market where you sell the rallies, right? I'm trying to time the market, I'm aggressive short-term trader. Okay, fine. You can try to do that. But if you're a long-term investor and you kind of think about long-term, I would encourage you to consider selling to the rallies. Joseph, thank you. Have a good weekend. VS investing. Right now, the best strategy is selling to the rallies. Every time market rallies, you sell, right? If you're a long-term investor, you don't have stop losses, you don't have that written contract with yourself that you're never going to be down more than 20%. You either have mental stops, so you don't have stop losses, right? Long-term investor. I think the strategy should be selling to the rallies. If it reaches for 20, sell. Reaches for 40, sell. Reaches for 50, sell. Large cash position, and I think this is a way to make money in this market. If you're short-term tactical trader, 390 is 10% up, 10% down. If you can time it well, then obviously you can make money. All right. Meanwhile, let's see before we adjourn. Oh, that's at 10:38. So that's all I have for today. Thank you very much. There is no closing bell today. I will see you guys on Monday. Thank you very much and have a great day.